Hey, everybody, it's me again, Christa Powell, your Atlanta Property Pro. And today I brought a friend. We are going to be talking to Candace Williams, who is a licensed loan officer here in the state of Georgia. Where else are you licensed, Candace?
Just in Georgia.
And-
So, me specifically by licensure Georgia, but my branch, the entire Southeast, so we can cover anybody.
Awesome. And I talk a lot about this whole concept of buy before you sell. And so I thought it'd be really good to bring on an actual expert. Awesome. Who can answer a lot of our questions and explain a little more clearly how these programs work, who they're most appropriate for, some of the things you have to think about, and also
Absolutely.
get to know this a little bit better because chances are, if you're working with one of me, a real estate agent, you're probably also at some point going to be working with a loan officer. So here is one that I trust and think very highly of.
Thanks.
All right, Candice. So tell us a little bit about yourself and what you do as a loan officer.
Yeah, absolutely. So, my name is Candace Williams. I am a licensed loan originator with Direct Lending Solutions. So, or being a loan originator means that I have the ability to write loans from a real estate perspective on the residential side. I help people to buy, to refi, or to invest in real estate. So, I get a chance to know them personally. I get a chance to understand their dream of how real estate fits into their long term wealth plan, and then also help them to guide through the process of what they need to do in order to get approved and close on that loan and move on to the next transaction.
And it's such like a stressful part of the whole undertaking of, so I'm always like, I think what we do as realtors is can be a lot of psychology and like
Mhm.
counseling, but you for sure are definitely dealing with a lot of people's challenges too. So kudos to you.
I make
So
a lot of best friends. Make a lot of best friends.
tell me a little bit about C. Williams Loans and the Home University.
Yeah, absolutely. As I mentioned, I'm with Direct Lending Solutions. That is my brokerage that I operate under. However, C. Williams Loans is me, Candace Williams. And so I always brand myself specifically because I feel like I approach the lending aspect a little bit differently. I consider myself a lifestyle lender. And being a lifestyle lender, I'm looking at how does this purchase or property fit into your long-term equation? And you heard me mention that up front because the average person only stays in their primary residence 7 years. So you're talking about a 30-year loan term. We're making decisions today for something that we know is likely to change, but how does it change? And so this option that you're talking about right now is critical because people do buy and sell properties fluidly. Home University actually stands for Home Ownership Made Easy. It is a co-founded solution that helps people to break down what they feel like is difficult about the loan and the buying process for real estate. I found myself answering the same questions over and over again. And I said, wait a minute, if I'm getting these same questions, then that means that there's an opportunity to educate, which is super, super important to me because not only do I want you to close on the loan, I want you to understand how you close, why you close successfully so that you can go tell the next person. Because when one person buys, two people buy, three people, and our whole communities change. And so that is the true wealth equation and how Home University fits in there.
I love everything about that. Like anyone who watches me knows that like education is my linchpin. I think the more informed you are as a homeowner, home buyer, whatever it is, home seller,
Yeah,
you, you're it's just going to be less stressful and you're going to feel better about whatever choice it is you make and wherever you end up because you were able to make a decision based on being informed. And the more
absolutely.
knowledge is power, right?
Yeah.
And it's only gonna help you get to a place that works for you, and one person's solution is not everyone's
Yeah.
solution, and the only way you're gonna know what's the best solution for you is to be informed.
In my lifetime, I've purchased 7 homes, and so that's been everything from primary residence to investments to second homes, and being on this side of the table now, the things that I wish I would have known during those purchase opportunities is what I pass along to other people, saying, "You didn't ask me, but let me inform you," or, "The next time you have this conversation with a lender, you should probably ask this," those types of things.
Exactly. And so how does that home university how does it support homeowners?
Yeah. So existing homeowners have a different education side, right? They have been in the home, they are attached to the home, there's emotion there as well, but it's also a transaction that needs to occur. So there's education on how do I prepare to sell and then to purchase again? Or what do I do after I sell if I don't decide to purchase again? Because there are tax implications swaying people.
Yeah.
Yeah. And so those types of things. And then in addition to that, helps them to just have that other mindset. I own this property. I love this property. The next person coming in to buy does not have that same emotional attachment. So how do you detach from the property, see it as the financial transaction that it is, but then also understand how to negotiate and leverage? There are a lot of things that are moving.
So I want to talk a little bit about a main problem that I try to solve, which is the seller's dilemma. And the goal obviously is to help sellers identify what they need to happen in
Mhm.
order to sell their home, like, and what their goals are. And usually it's a balance between price and speed. Generally speaking, it's some
Mhm.
combination of those two, and which one matters more, are we weighted more to one versus the other.
Yeah.
In your experience, what do you think are some of the most common challenges that homeowners face when they want to move, but they still own a property?
Yeah. So great question. Number one is that emotion. Number two is a plan. I think that's one of the biggest challenges that people face. I want to move, but what's the plan? What's the timeline? What's the expense? What's the average home cost now? What equity do I have in my property? Or am I at a shortfall and I need to make a different kind of decision? Should I hold this property and turn it into my first investment property and then purchase something else? There are tons of things. So having a plan, very critical.
Good. Yeah. For example, I decide that empty nesters, downsizers, lived here in the Atlanta metro area out in the burbs. And at the time where they lived out in the burbs made sense because they had a family, they had kids,
Mhm.
and it was a
School
very
district.
friendly neighborhood. Exactly. Like great schools, all that stuff. And so eventually those tiny humans become not so tiny humans and they leave the house, right? Here you are in this big old house and they're in the burbs. And we know that Atlanta traffic can be exciting. And they just want, and like pretty much the equity they had in that home was what would get them to their next home.
Sure.
So, can you talk to me a little bit about what it means to be a contingent buyer and why sellers on one side of the transaction are often, or like the sellers on the other side of the transaction are often hesitant to accept those kinds of offers?
Yeah, absolutely. So being a contingent buyer means that I want to purchase if I do or subject to me completing another task. So that means that I want to purchase your house. However, I need to sell my house before I can purchase your house. So will you please, Mr. or Mrs. Wholesaler, pause your sales process and take your house off the market to hold it for me while I start my own process in order to complete the transaction. And honestly, it's a chain effect because if one thing goes wrong on one side, it impacts everything else. And so that is the biggest dilemma for existing homeowners in trying to make that transition. And so you have to have solutions that kind of, for lack of a better word, bridge the
Right.
gap along the way.
The challenge for this couple that I'm talking about is that they lost out on a couple resale properties that they were super interested in. They needed to be able to pull out the cash out of their home, and so just it was a whole thing. And then even when they looked at new construction, and even though there was still like a timeline, like what if they didn't? And I remember the one unit they wanted. They're lovely people, but they're very particular. They were like, no, no, this is the only unit we want. This one in the whole
Mhm.
subdivision. They're like,
Yeah.
no, if it's not that one, we don't want it. That particular one was due to go on market at a certain date. Like the builder already knew. And so they were like, can you guarantee that you'll sell our house by that date? I was like, I would no.
So my eyes get really listen, I'm guaranteed.
To tell you that I feel no, that one I would never. And to everyone watching, any realtor who tells you they can for sure sell your house by a certain date, take it with a massive grain of salt, like a
Right.
ginormous chunk of salt, because
Right.
it's none of us controls the market.
Nope.
The market is it does what it wants to do over there, and we
Mhm.
do our best to work with it.
Yeah.
Yeah, so exactly. So they were talking about contingency offers, and
Yeah.
and even with and this was a national builder that they were buying from, and even the national builder was like, no,
Yeah. Yeah,
we
because it asks the other it takes a lot of the other person to agree to that, but it really is asking them to put all your eggs in my basket. Wait. and see if
Yeah.
there's an opportunity. Yeah. And I mentioned the scenario if the buyer has to sell too, but what about if the buyer does not have to sell and they're renting and they're ready? So then it becomes a competitive kind of leverage tool for that person in the negotiation. And that's all kind of pressure on the existing homeowner
Right.
to move this house, to
Exactly.
be able to qualify, go to the next house,
It's
have
fun,
all
yeah.
their plans
And
together.
it's a domino effect.
Mhm,
There's
mhm.
just things.
Yeah.
So how often are you in your just day-to-day interactions with clients and customers coming across people who do feel like they're stuck?
Oh, every day. Every day. That's the number one question because as you mentioned, a lot of downsizing is occurring right now. This is April, right? So we're approaching graduation season. And I would say that you'll see the vast majority of people making the same type of transition that you just mentioned with your client. That is their number one concern. Number one, how do I get out? And number two, what do I qualify for? And so those 2 things oftentimes are very connected to making that plan and doing it confidently. So we start there. What's driving the need to move
Right.
to relocate? That's the other thing. Right.
Because yeah, if I have a job and they need me
Mhm.
to start by X date,
I gotta go. Yeah.
the way my bills are set up, doing to pay for stuff.
Well, exactly.
You know.
Exactly.
All right. So the solution that I came across and I learned about it through you is this whole idea of list, sell, and then buy on your terms. Like, how does that work from start to finish?
Yes. So this is the ideal program for the seller who is equity rich. So I know I'm gonna get tons of comments about what is equity. Well, let me state my case real quick.
I do.
Equity rich, right? When I talk about equity, I'm going to use some numbers here because it's me. I'm a lender. That's all we talk about all day is complex math problems.
And that's why, listen, everybody has, it's a team and everyone has like marketing and stuff. I got you all day, but numbers, please, my friend.
Exactly, exactly. Okay, so let's just talk about equity. Equity is the difference between the value of the home and what you owe on the home. So that equity portion belongs to you, right? That is to you, the seller, the homeowner, that is your baby. And hopefully it's enough. But I'll tell you, in this market, on average, the average US homeowner is sitting on approximately $300,000 of equity. So thank you, COVID. Brought a lot of heartache, brought a lot of pain, but financially, it created the probably largest boost in our home value calculation in years. And so the average homeowner is sitting on $300,000 of equity. What also happened post COVID, so values went up. And then what happened to the interest rates? They skyrocketed, which means that less people were actually purchasing. So it meant that homeowners are in their homes for longer periods than they ever had before because now there is a cost to move.
Yeah.
And I'm not talking about moving expenses. I'm not talking about, I'm talking about, am I potentially doubling my mortgage by making the transition for a home that is not that much more than the home that I'm in? So there's a big calculation gap there. The other thing, 50% of homes right now owe less than 50% of the home value. So that is why we say that they are equity rich because they're sitting on that difference between the two. So this program taps into the equity early and it allows that existing homeowner to be able to purchase their new home. Let me say this, qualify, purchase their new home, move, still list their property for market value. And then if they do not sell it within 120 days after it's been listed by their realtor, then the lender will buy it from them at the predefined price. So it is creating an opportunity for those homeowners to be able to make a serious transition, contingency free. Contingency free.
I
We
see where.
just talked about the pain of contingency. So contingency free with a backup offer in the event of. So safety net too.
So I have so many questions. But my first question, and I think the
Mhm.
most important for is who is this for? Who does this actually make sense for? Because this sounds amazing, but obviously not everything is for everybody. We mentioned that.
Right.
Who fits into this bucket?
Yeah. So this would be for homeowners that have, as I mentioned, that equity calculation. You can do your own equity calculation. Every single person watching this right now can go contact you and say, Krista, can you give me perspective on the estimated home value for my property as it exists today? Once you give them that number, please don't go to Zillow and Trulia and Redfin, and I could name 16 names right now, but do not use that as your number. Like
We
you
told you about why to do that.
you really need to consult with the professional and get that number. So get the number first from Krista. Then number two, you want to look at your mortgage balance. So just look at your most recent mortgage statement. It's going to tell you the balance that you owe, if anything, on that property, and also any second mortgages or home equity lines that you may have, because guess what? They have to be satisfied before you can purchase new. So the difference between those two numbers, that is your equity number. So first of all, you must have equity in the property. And I'm going to tell you that they will only count 75% of that equity number in doing your overall calculation. So that's the other master number. So this is for people who are, I would say, in established communities, have been in their homes for, I'm going to say 5 to maybe 10 years plus, really leaning towards that 10-year mark, because they'll have that equity in the property for the years, or that child is graduating. So they've been there since the child was there from birth. But those individuals, if not necessarily for those who are in new construction communities where there's still existing construction being done. Because the property value does this in those communities, right?
Yeah.
You bought at this number, however, they're selling at a different number, very hard for the lender or appraiser really to be able to calculate. So single family, primarily, you could do a townhome. I would not do a condo under this product for that's a whole another episode. But single family, mature homes, townhomes as well, you should be fine. And those that are have that equity calculation from a professional like you.
Okay. Okay. So that's good to know about who qualifies.
Mhm.
So we said not condos. What if
Mhm.
you're like a self-employed homeowner or you have a non-traditional income?
Yeah. So non-traditional income is okay because this type of program is qualifying two things. It's qualifying the home, number one, and then it's qualifying you, the individual. So the difference between non-traditional and traditional earners is how we refer to it. Non-traditional are those self-employed individuals that are operating independently where they own a business, own more than 25% in the company. That's number one. Number two, they are operating a standard P&L or profit and loss with a registered business, but typically they're filing taxes to verify income, or they're not, and they need to do a bank statement because I operate in more cash flow in my income and business than I do in my reporting.
Which, yeah, if anyone who's self-employed who's watching this understands that, yeah,
Yeah,
that's oftentimes the challenge. Anytime I come across a client who is self-employed, is okay. We got to look at how we're going to get this across the board. Sometimes a little bit.
absolutely. Yeah. And so those 1099, what we refer to as gig workers as well, that would be again in that self-employed category. Think everybody who does not receive a W-2.
Yeah.
Yeah. That's the easiest way.
Yeah. Cool. And what does the qualification look like for this? Like, what other factors, like credit score? I mean, we talked
Mhm.
about your employment status, but what about things like credit score and so on?
Yeah. So credit score is a minimum 620. So that is it's pretty easy to achieve. I would say a 620. So a 620 credit score, the maximum loan amount or purchase is $2 million. So that's another factor, right? So if you're in that $5-10 million home, this is probably not the best thing for you.
As it's
But
going to 70% up to that
Mhm.
$2.
Exactly. Yeah.
Yeah. Okay.
So 620 credit score, stable income, single family residence. You could actually do a duplex under this opportunity as well. And I'm looking to see if there's anything else that I would include that is different. There's really nothing different other than traditional lending because it's actual home loan.
Okay. Okay. Speaking of home, how does this protect the seller from carrying two payments?
Yeah. So part of this program, the great part about it is when you're doing your equity calculation and then also giving your contingent offer, they also are carving out at least 6 months of mortgage payment to be set aside in reserves as part of that equity calculation. So they're making sure that you have a mortgage reserve in the meantime in the event that property does not sell during the 120 days.
Oh, okay, okay. So that's part of the up to 70% because that number
Correct.
may fluctuate depending on how much needs to be put aside for ongoing mortgage payments, depending on how long the property sits.
Depending on how long it sits. I guess it would depend on the area, right? Days on market, you would be the expert in that. So days on market for a given area will be a really good indicator of, hey, in the equity calculation, we've set aside 6 months reserves, but we really may not need that if the average turn time is 41 days.
Yeah. And right now, and this is what month? April of 2026. In April, we're looking at somewhere between in Metro Atlanta, somewhere between 30 and 50 days on
Mhm.
market, about where we're sitting, depending on what part of town you're in and so on.
Yeah. So
Yeah.
that's a really good indication of even though that amount may be carved out of the equity calc and set aside, that's coming right back to you. So more money coming back to that individual.
That's not as big a deal. I have other questions. Okay, so what does the qualification process look like? What kind of paperwork do you need from me? So that family I was talking about, they want to use this so they don't have to deal with the whole contingent offer situation and they can get the exact unit that they want. What do you need from them?
Yeah. So they're qualifying two things. Remember, they're qualifying for the equity tap, which is pulling the equity out of the property prior to so that they can make that transition and use that payment towards their down payment on their new home. So because they're doing those two things simultaneously, it is the standard loan process.
Okay.
So they're going to need to provide an ID because we need to know you are who you say you are. You'd be surprised. Number 2, we need pay stubs. So we need to see that there is current income. We also need to see W-2s or tax returns, depends on their situation, as we talked about their earning status, so that we can get an idea of what their historical income has been, because it's always an average. We know income does this for a lot of people. And
Yeah.
then also asset statements. And we use asset statements like bank statements, investments, stock, all of those things, pension. We use those to get an idea of how, in the event of a rainy day, and this job does not pay you tomorrow for whatever reason, what do you have available?
Right.
Because really you're tapping the equity in the property. So it's not like you're coming out of pocket cash flow, but we do need to make sure that there are reserves available.
Okay. And what types of costs are typically involved for the seller in this kind of product?
Yes. So there are a couple of fees to be aware of. There is a transaction fee. It's typically about 2% of the purchase price. So keep that in mind as well, which will vary depending on the property value, depending on the location. It's a couple of different things that they have here. And then also, you're going to have closing costs because this is an actual closing transaction where you're advancing funds. So somebody has to document that
Right.
these funds have been taken out of this property, so you'll have a closing attorney involved in it as well. Other than that, there is I talked about the 6 months reserve, so you already know that's pulled aside. So I can give you a calculation if that helps
Yeah.
for individuals to.
Yeah.
Okay. So I want you to think about a property that's $400,000 in value, right? So we've got a $400,000 property in value. We're going to take 75% of that number. Remember, that is the maximum that you can advance on equity. The
Mhm.
25% just hangs in the property so that we don't rip the property dry and there's nothing there at the end. Say you owe $200,000 on that property.
Okay.
So now at that point, I have $100,000 of equity in the property available to me.
Mhm.
Okay. So I got a 2.5% fee. I say 2.5% just for math purposes. So that's $10,000. I have my reserves. If my mortgage is $1,800 a month, then that's another $10,000 that's pulled aside. And then I probably have about $5,000 in closing costs. I'm using just round numbers so that we can be pretty easy here. So you're probably looking at now, after all of this, I have about $75,000 worth of equity available to me to be able to go do something else. And
Right.
that's how I walk in contingency free. I have a backup offer. I'm qualified to purchase a new home. I have a deposit now or down payment to put on the new home. And so it just levels out for that seller and they can do it confidently and without stressing.
S- Yeah. And especially when you were talking about speed and we're talking about reducing stress. And another thing that I like to tell people when I'm describing these programs is it's a lot easier for everybody to show a house that no one's living in. We don't, I can tell you just from having listed homes and living in a showroom is no fun for anybody living in a showroom.
Exactly.
When you take a shower, now you have to clean the shower every single time and all your stuff and put it it gets old real quick.
Yeah.
The same couple that I was talking about, they would eat over the sink. Just to
Just they don't want to. Yeah, it makes sense.
Yeah, and even with moving, in terms of staging a home, you can actually leave some of your furniture behind, and that's there you go. We've
Yeah.
staged the house. So I found that that's a really attractive thing for a lot of home sellers as well. The idea of just being able to sell the house and not have to worry about when people are coming in and out, and if you're moving, you don't have to move twice.
No,
You know,
there's one move. Yeah. And
you
you
know,
just made me think of one more thing, Krista, too.
yeah,
So keep in mind to that point about it being cleaned, about stage and all of that, you don't even list the old departing property until 21 days after you close on the new property. So that is their requirement in making that transition so that you have that time frame to be able to
one day
breathe.
move. That is a gift.
Yeah.
It is such a gift.
Good breathe. Yeah.
It's amazing. That just gives you so much time to
Yeah.
get things yeah. So the stress levels have just come down significantly.
Absolutely.
Now,
Absolutely.
how in terms of obviously there's a cost associated with this.
Yeah.
When you have this conversation with clients, how are you comparing the cost of doing this versus them just doing like a traditional open market sale? And not obviously like the cost
Mhm.
of the spots and all that stuff, but just like the numbers.
Yeah. So I talked to them about, well, as a lender, every lender is going to be a little bit different. We do not have an origination fee. So we don't charge you an cost for doing the loan. And so, because of that, to have a 2.5% or 2% fee associated with this program for this specific lender, they do have a fee on this program. But that is minimal in comparison to the negotiations and the concessions that you will have to do in an active open market. So typically, and I'll use a couple of clients from just keep it anonymous. That's the one. Use a couple of scenarios. So I had one client who listed their property, who talked about this program and said, "Oh my goodness, I'm not paying anybody to do this for me. It's my equity. I have it there." And that is their right to do so. What I saw that client do, because the property was on the market for, I think it was a little bit over 60 days, they had to drop the price twice.
Well,
And then when somebody did purchase it, they offered 4% in seller concessions. They paid and paid again by the
yeah.
time that they did it. So I would tell anyone, know the math, run the numbers, ask the questions, and do a comparison. I do not see contracts these days because we're in a buyer's market. That's the other thing to keep in mind as well. Yeah, which means that you have more homes for sale than qualified buyers that are
Right.
ready to purchase. So buyers are super selective and they're like,
They
who
have
can I get it from?
ex- their choices.
Who can I get it from? Who's going to help me get it? So, being that that is the case, you have to be very strategic about it. But back to my point, contracts coming in, I do not see less than about $7,000 on the seller side giving concessions into the property to the new buyer, which means seller concessions are seller credits that
Right.
they're paying some aspect of the buyer's closing costs, prepaid fees, closing return. They're paying
Agreed.
something
Every
but no
buyer
less than about 7,000.
right now, they're asking for something.
Oh, absolutely.
Yeah. Like
Yeah,
the days are gone where people were just like, please sell me your house. I'll give you anything. Not a thing anymore. So
not
yeah,
a thing.
yes.
Absolutely. So that is something that I would say just weigh the costs, know the numbers, and the transparency in this type of loan process is incredibly high. It has to be disclosed. What are the fees? What are the timeframes? what is the contingency offer? Because you want to know that. Chris is going to tell you what your property's market value is, but then the lender has their own assessment of market value and they're using fair market value. So
Right.
that can be very different than retail market value.
Yeah.
So
Yeah.
you see my hands.
It,
Yeah.
it may be cash offer low, but
Mhm.
it won't be open market low. It won't be open market high
Mhm.
either. So
Exactly.
yeah, you have that. Yeah. And I heard someone say, I went to a training and they're saying that the if it gets to the point where where they end up having to do the contingency offer, they're not happy either because they
No,
haven't necessarily really made the money they want to. Nobody wins.
nobody
So
wins. Yeah.
they're fully in support of helping you do what you need to do to sell the property on the open market for the best price you can get it for, you know?
Absolutely.
Yes.
Absolutely. And that brings up another point. So, using this program, you want to be selling a market ready property, which means there is not major construction going on or renovation or any of those things in the property because
Mhm.
that time frame, that clock starts ticking, right? I have 21 days after I close on my new home to list the departing residents, but then I have 120 days before I either have to accept lender's offer or I had got a market offer.
Got it. Makes sense. And da, 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 did I mention that a ton of you answered a bunch of them now, so I'm trying to like, check off my list here. Okay, who are some of the key players involved in this? Because it is a loan, so I'm assuming there's an
Mhm.
appraisal.
Yeah, absolutely. So
Yeah,
there are a couple of things. So number one, there is an inspection. There's still
there
an
is
inspection, and the inspection is done by the lender. So the
right,
lender will assign an inspector to go out because again, the interest is getting the property to sell quickly.
right.
There is an appraiser because we need to know true market value for the property based on comparable homes in the area. So you have that. You have a loan officer, me, who's working with you in order to make sure that you can qualify, that the numbers are transparent, that you have all the details that you need. There's Christa as your realtor, who's going to guide you through the process in finding that new home, but also in marketing your existing or departing home so that you can then fix that project too. And then other than that's really it. Oh, closing attorney. So you'll have the closing attorney who will certify all the documents, sign off, and register the property. And then as part of the loan process, of course, you have an underwriter who's always looking for the risk associated with the ability to repay.
So is the timeline similar to a standard mortgage? Like I'm buying a house, or was looking at same 30 days to close time
Mhm.
period?
You're
Or is
actually looking a little bit longer. So I would say you're probably looking at about 45 days, 30 to 45 days. So not that much longer, not doubling the time, but you do have that additional window because, as I mentioned, there's a lot of are you in agreement with along the way?
got it. Okay.
Right? Yeah. Because at any point you could say, "Hey, this is like the client I mentioned, this is not going to work for me. Oh, I didn't want to do it this way. Or, hey, the
Right.
time is moving too quickly. I've had that scenario too. We're not ready to pack up everything. And that just meant you really weren't ready to make that transition. That's the emotion that I mentioned. That's
Yeah.
the emotion.
Yeah, like, all of a sudden you're like, "Whoa, it's happening," and that
Mhm.
can be overwhelming for
Yeah.
sure. So say I'm a realtor, I have a listing appointment, we sign a listing agreement, and in that process of me describing what services are offering, the different options that are available to them, this piques their interest, and I
Sure.
refer to you. Tell me a little bit about what that call just high level, what do you guys talk about in your initial consultation?
Yeah, absolutely. So very similar to your initial conversation, you want to refer them to me as early as possible in the same mindset that you would for pre-approval.
Got it.
Because we want to have that conversation, do the calculation, confirm the equity to see if this is even an option before they hang their hat on this as
Right,
being an option.
right.
And then once we confirm that this is an option and they want to pursue it, then I'm going to reconnect. I'm going to go through and qualify them all the things that I would do, but I'm going to connect with you in order to say, hey, this is the approach. So they need to really start looking before we do anything with listing the existing home because of that whole window that they have to free range shop and also to move.
Got it. Okay, awesome. So they can get an idea of what are next steps.
Yep.
This has been super, super helpful. I don't want to keep you for too much longer. And I guess, yep, we can answer that with the very first step. And okay, where can people find you and learn more?
Oh, I love that. So they can always find me online. I do post a lot on Instagram and Facebook at
And we think all of that. All you can.
Candace Loans for Homes. So I try to post informative and educational content so that you understand the inside out of lending. And then also you get to know me as well. Cause I told you I make a lot of best friends. When you start talking to people about their finances and things like that, they're
Yeah.
like, you're my friend. I know you.
Friendship yes, we want our close personal relationship.
Absolutely.
That's I think that people don't always think about when in this industry that we're in. Like, one, it's your home, so even if you've lived there 2 years or 20 years, there is some level of an emotional attachment, either in the
Absolutely.
acquisition or letting go. And in addition to that, like, it's a big deal. There are a lot of moving parts, and you need somebody who you can pick up the phone and be like, "I'm so confused.
Yeah.
What's going on?" So I think we can't like disregard just the how nice it is to have someone to pick up the phone that you can talk to.
Oh, absolutely. Which is why I know we're in a state of automation and everyone's focused on how do I do it faster and how do I do it online instead of human interaction. But I will still say and put my foot down on there still has to be human interaction in a real estate transaction. I don't even know if that's a t-shirt or a slogan or a something.
It should definitely be a t-shirt. 100.
But it is critical because of all the things that you just mentioned, the conversations, the touch points, the understanding, the I thought you meant wait, when you said, "Okay, hold on. So now we need to restructure," like, that happened, and it's critical. Yeah.
And what I've attended like realtor focused trainings from some of the companies that offer these types of loan products. But I still learned things from you today that because there's just always so much information. So having somebody who's like a central focus point, I think is super important.
Yeah.
One last question, then I'll let you go. What's one piece of advice you would give every homeowner before they list their home?
Know your numbers. Know your numbers. Take the time to do the quick work of knowing your own numbers, which means that you're working with trusted professionals who can guide you in what those numbers are, but also what does that number mean to you? And then what are you going to do with it? I will use this example of a homeowner that purchased a home, went through programs in order to receive assistance in order to get into their home, and later decided that they're going to sell their home because one of the companies, I'm not going to say who they are, like knocked on the door and said, "Would you like to sell?" And they said, "Yes, I'd like to sell." And I've had two clients this actually has happened to. They sold, and then that money did not have an assignment, meaning that it was not attached to investing in more real estate. It was not attached to investing in a business. It did not have an assignment.
And
And when it came and went. Now guess what happens? They are forever renters. Why? Because there's no capital left in order to go back in and to start that journey again. So know your numbers, but also give your money an assignment.
yeah, have a plan. So, all right, I'm actually going to have a resource below, guys, that it links a couple calculators that I've built for the Atlanta market that help you compare some of these options. They also help you figure out like a seller net based on what county you live in the
Mhm.
Atlanta metro area. So you can have an idea of what the cost variations may be. So you do have an idea of what you're actually looking at when you price your home and just get a ballpark idea. So a great way for you to do some research, as Candace
Yeah.
said, to kind of get to know your numbers. Candace, thank you so very much for joining
Yeah, absolutely. Anytime.
day two. And thanks for joining me, everybody. I'll see you on my next video. Don't forget to like and subscribe and get the little notification thing. Talk to you soon. Bye.